What would our lives be like if banks suddenly disappeared? Theft and fraud would run rampant as people start hoarding cash, gold, or physical assets. Large value transactions would become extremely difficult, as you might have to haul a truckload of equivalent valuables to make an exchange. Interest rates on informal private loans would soar to unaffordable levels. Then how did banks come into being? A long time ago in ancient Babylon, King Hammurabi had already inscribed the rules of lending and borrowing in his code. Back then, borrowing and repaying money was a highly risky personal affair. Borrowers often had to provide all sorts of troublesome collateral. With the decline of the Roman Empire, monetary lending also fell into a slump in Europe for a time. Time moved on to the Middle Ages. The Crusades, a mighty and momentous campaign, began in full swing. Kings and nobles were in urgent need of large sums of money to fund the wars in distant lands, and thus the ancient industry of banking re-emerged in Europe. On the streets of Florence, Italy, Jewish moneylenders began using benches as makeshift desks. This is where the word bank comes from. At that time, loan interest rates were exorbitant, reaching as high as 24% or even 48%. It was not until 1275 that the laws of Edward I of England were enacted. In the name of opposing usury, he actually seized the property of many Jewish moneylenders by this means. In the 14th century, the protagonists of the story became the shrewd and powerful merchant families of Italy. The Medici, the Bardi, the Peruzzi, and so on. They established permanent banking institutions in cities like Florence and Venice, laying the groundwork for modern banking. Among them, the Monte dei Paschi di Siena, founded in 1472, is still in operation to this day. It is the oldest bank in the world. Almost at the same time, the rulers also began to get involved. In 1407, the Doge of Genoa founded the first government-chartered bank, Bank of St. George. It functioned as an early national bank and did not cease operations until the Napoleonic invasion in 1805. Let us turn our gaze to the distant east. In the Song dynasty of China, an epoch-making financial instrument emerged. The world's earliest paper money was born in Sichuan in 1024. Subsequently, two types of financial institutions flourished: Piahao, which operated nationwide, and Chanshuang, which ran locally. While traditional Chinese finance placed greater emphasis on personal connections and guangxi, core banking functions such as deposits, loans, and remittances were equally well developed here. Fast forward to the 19th century. The inventions of the telegraph and electricity gave wings to the banking industry. Information could be transmitted across the globe in an instant. The speed of capital flow accelerated at an unprecedented rate. Financial giants such as the Rothschild family were the pioneers of this era of international banking. From the Renaissance to the present day, the core functions of banks have remained unchanged. They are still an indispensable circulatory system for the lifeblood of the economy and society. Only the benches of old have evolved into today's mobile banking apps, and the profits generated by creating value through financial services endure to this day under a more modern name.